Hello, and welcome to another version of Hawk's Sentry Report. I am Hawk Arps, and I'm Vice President of Jan Arps Traders Toolbox. And this is the Sentry Report for May 9th, 2013, midweek report. And I have some interesting things I want to show you. So let's get right to the charts. Well, everyone wants to know whether the American markets are topping out and getting ready to pull back, correct, reverse, tumble, collapse, or whether they're just fueling up and starting out the next leg to boldly go where no stock index has gone before. And of course, I want to know the same thing. So I've decided I would look at sector rotation in my own way to identify whether the sectors that are normally strengthening when the market is weakening are getting stronger, or whether the sectors that are normally strengthening and leading a market up are getting stronger. Now, the sectors that generally lead a market up are technology sectors, financial sectors. The markets that generally get stronger as the market gets weaker would be the utility stocks, the dividend yielding stocks, treasury bonds, things like that. So what I've done is I've created here some synthetic symbols, as I noted a week or two ago. And I've got all of the sectors represented by ETFs, and I divide them all by the SPY and create a symbol which shows the relative strength of each sector vis-a-vis the SPY. And I've done the same with oil, gold, junk bonds, dividend stocks, treasury bonds, and some of the different indexes here. So in this way, I can use some of the tools from our Sentry toolkit, like the TTB triple trender, TTB radar 3 indicator, and a TTB trend exhaustion 1 indicator that shows me when the radar 2 price leader is crossing a fast or slow line. To identify the strength of the trend, I use the triple trender and the radar 3 to identify the strength of the trend. And in this case, radar 2, or trend exhaustion 1, to identify acceleration or deceleration of each sector relative to the SPY. Are you still with me? I hope I didn't get too technical there. But if you look at this indicator, this is the triple trender, the TTB triple trender on the spreadsheet. What it does is it shows green cells to represent each trender if it's bullish, and if the trenders are bearish, it plots red cells and ends up putting a score at the end, which sums the number of green and red cells. So I can look at the triple trender and see that the ones with a score of 6 are the strongest sectors. That would be the financials, the industrials, and the technology sectors. And I can compare these same sector symbols to what their radar 3 is right now. I can see that this indicator shows me how long ago radar 3 crossed over the 0 line to identify a bullish or bearish trend strength. And actually I see that the financial sector relative to the SPY just crossed the 0 line in the radar 3 on this 1 bar ago. And in fact, we had a price leader radar 2 acceleration signal on that bar. So I see that financial sector looks like it's getting particularly strong right now. And of the weak sectors, you can see we have consumer staples, utilities, and healthcare here are all negative 6s. And you can see they're all have negative values in the radar 3 trend strength. So let me show you what these look like on a chart. And we can see what these synthetic symbols show us about the strength of certain sectors vis-a-vis the SPY. Let's take a look at the weak sectors first. Let's take a look at the utility sector. So I click on this synthetic symbol and I have it applied here to these charts. And you can see I have here a weekly chart, and you can see that the utility sector has been generally going down over the last several years, and is actually currently about as weak as it's ever been vis-a-vis the SPY. So that does not look to me like there's a flight to safety in the stock market, at least as far as the weekly um, utilities sector looks relative to the S&P itself. Now here's the daily market of the utilities chart, and you can see I have to spread it out there. It's kind of low, but you can see that especially over the last 2 weeks, the utilities have been getting considerably weaker. Now we've crossed all three trenders, and it's completely bearish. Even the radar 3 trend strength is bearish down here. So, and the fear greed is bearish as well. So this is what the sector looks like relative to the SPY. Now, if you want to look at the sector in and of itself, here is XLU. I have the SPY here at the bottom. You can see just been rising and rising since last November. Fear greed indicator and radar 3 here. You can see radar 3 is starting to show bearishness for the utilities ETF, although we still relatively bullish in the triple trender. We still have at least one trender still bullish. So even though XLU has been going up with the SPY, you can see from the other charts that it has not been going up as strongly as the SPY over the last several years. Well, let's take a look at one of the stronger stocks then in comparison. One of the stronger sectors in comparison. Let's take a look at the XLF, and we have a weekly chart of that vis-a-vis the SPY, and it's just kind of going sideways. It got very weak in the end of 2011 and has been bullish since then. But it took this long for the financial sector, I believe, to recover from the debts it incurred after the market implosion of 2008 and 2009. If we look at the daily chart of the financial sector versus the SPY, you can see it actually has been going up quite strongly and is currently it's actually just testing new highs right now. You can see that radar 3 is now bullish, as we noted earlier. All three trenders are bullish. So I see this as an indication that there's enthusiasm in the financial markets relative to the SPY, that they're stronger than the S&P, and the S&P is pretty strong right now. Here's the XLF financial sector in and of itself, and of course it has been rising with the S&P over the last 6 months, but it just shows that it's rising even more over the last week than the S&P, which we have here on the bottom, and the S&P has been rising a lot. So I use this kind of information to identify, one, how strong the market is, and then I can also start to look for stock investments in the stronger sectors, since I think that the market is likely to go up. So let's take a look at how we can use this theory in practice. I have here applied to a spreadsheet the S&P, all the symbols of the S&P 500, and I have them sorted by sector, as you can see, and we have decided that the financial sector is a likely strong sector for the near term. So I've separated the financial sector from the rest of the market, and let's say I'm looking for a trend trade, a confirmation of a trend. So some of the tools I might want to use would be the TTB triple trender again, which identifies the strength of the three trenders, and the TTB radar 3, which gives me the value of radar 3 and how long ago it either changed colors to cross zero. In this case, I have it set to zero cross. I have other indicators with other signals, but these are the best ones for actually identifying a trend. So let's start by sorting on the score of triple trender, and you can see here that we have a lot of sixes. The ones with the white in the score column mean that it just turned to 6 on this bar, so that's the most recent confirmation of the triple trender. So I like this. We have BAC, Bank of America, Goldman Sachs, but I see that the Goldman Sachs trend strength index is negative, so I'm interested in something with a positive radar 3 trend strength. So I'm going to look at the Bank of America. It's got a score of 6. It just crossed over the 0 line. It's got a blue trend strength of 33.35. That's pretty good. So I can just link this spreadsheet to a chart. Let's see what we come up with. So here's the chart of Bank of America. And as you can see, the triple trender did just turn bullish on all 3 trenders. So we have a bullish trend identified in the triple trender. We have a recent bullish trend identified in the radar 3 trend strength index. You can see we have much higher radar 1 fear greed buying pressure in this thrust up, at least, than we have seen for a little while. So this looks like it's breaking out to new highs. Let's see here. We have previous highs right there. So we're just testing new highs. This might be a good opportunity to buy into a strong stock in a strong sector. I even see this flag here that was formed at the first part of the year. And while this stock has been going sideways, while the market in general has been going up. So clearly the stock is not as strong as the S&P in general, but it's also not as overextended. Right here on this early February day, we had a breakout of the flag pattern. That's what this dot is right here. And you can see we have a flag target up here at 1430. So I think we could buy this Bank of America here at around $13 and try to make about 7% on it with a target of 1430. I want to take just a minute on behalf of Jan Arps Traders Toolbox to say thank you for spending a little bit of your time watching this brief video. And I want to remind you that all of the examples shown in this video are for purely educational purposes. We are not licensed, nor do we propose to recommend that you buy or sell anything. In fact, trading futures and equities can be hazardous to your account. It's very risky business, so make sure you're careful with the way you trade. But with good tools, your trading can be much more profitable. And with that, may the trend be with you.